Today, we will discuss the corporate income tax in the Philippines. We will find out why our country has the highest corporate income tax in the ASEAN region. We will also present why there is a need to lower the present corporate income tax rate and how it is affecting our country's competitive advantage. I am Dr. Victor B. Enriga, and this is TaxTV, a taxpayer's guide to Philippine taxation.
A corporation is an artificial being created by operation of law, having the rights of succession and the powers, attributes, and properties expressly authorized by law or incident to its existence. The National Internal Revenue Code, as amended, defined corporation in Section 22B. A corporation shall include partnerships, no matter how created or organized, joint stock companies, joint accounts, associations, or insurance companies, but does not include general professional partnerships, joint ventures, or consortiums. Corporate income tax is a tax collected from companies, wherein the amount is based on the net income companies obtained while exercising their business activities during one business year. Domestic corporation is a corporation created or organized in the Philippines or under its law. Securities and Exchange Commission, or SEC, issues a certificate of registration and its legal personality commences upon the approval of its articles of incorporation. Resident foreign corporation applies to foreign corporations engaged in trade or business within the Philippines. Non-resident foreign corporation is a corporation not engaged in trade or business within the Philippines.
The Philippines has been struggling with our fiscal deficit for the past years. And one of the measures taken to solve this deficit was to impose hefty taxes on its corporate citizens. The first month of the Duterte administration saw the declaration of higher spending plans, coupled with the President's plan to lower both personal and corporate income taxes. Last year, the deficit only accounted to 0.9% of GDP or gross domestic product. However, on the revenue side, the story is different. There is really no problem on spending, with deficit programmed to hit 3% of gross domestic products. At 14.7% of GDP, the Philippines has one of the lower revenue to GDP ratio among investment-grade countries. We are just starting to recover what was lost during the previous administrations. We cannot afford drastic revenue losses now. The national revenues are necessary to finance growing economic and social needs.
In search of career advancement, check out our job site at www.jobs180.com/Pointman. Pointman, your trusted career builder since 1991. Aquabest, have peace of mind in every drop. Sa Aquabest, kampante ka.
Stay tuned. We'll be right back.
We would like to thank Star Express Apartel, located at 139 Matahimik Street, Central UP Village, Quezon City. For reservations, call 433 5605. Big Apple Express Spa, located at the upper parking level of SM City, Marikina. For inquiries, call 400-3254 or text 0915-879-7524.
The main argument for corporate income tax reduction is that the Philippines has the highest tax rate in the ASEAN. While it is true, countries with low rates have other sources of revenues which our country do not have at the moment. In Thailand, for instance, they have roughly 14 billion pesos from state asset sales. On the other hand, the Philippines earn 2 billion pesos only each year doing the same. In Singapore, their government earned around 700 billion pesos from tourist receipts alone compared to our 220 billion pesos collection. Indonesia has a lot of mineral reserves. They earn 33.59 billion US dollars in mining revenues alone, while the Philippines earned less than 2 billion US dollars. Meanwhile, Malaysia is an oil exporting country and has a lot of revenues selling petroleum products. Lowering corporate income taxes is positive for investors. So, we can expect increase in foreign direct investments. More investments means more demands. More demands means higher revenues. The question now is, are we ready to cut corporate income tax to boost our competitive edge?
We would like to thank Phoenix Garuda Construction and Development Corporation, 1408 Morningstar Building, 42 Central Avenue, Barangay Culiat, Quezon City. Clinica OS Habitares, White Plains West, Katipunan Avenue, White Plains, Quezon City. For your physical therapy and rehabilitation and orthopedic management needs, book an appointment at 0917-761-9813.
Stay tuned. We'll be right back.
We would like to thank North Block Enterprises, distributor of industrial lubricants. Number 3 Illinois Street, Barangay Silangan, Cubao, Quezon City. Telephone number 411-4427. North Block Enterprises, dedicated to integrity, quality, and customer satisfaction. Reyes Hair Cutters, your Filipino family salon. 8 Waves Water Park and Hotel, Bulacan's first name in water parks.
Let us now analyze the corporate income tax rate of the ASEAN countries. As you can see in the graph, our country has the highest rate in the region with 30%, followed by Indonesia and Malaysia with 25%, while Thailand and Vietnam has 20% and 22% respectively. Singapore, which has the highest foreign direct investments among its neighbors, has even the most attractive income tax package at 17%. Take note, Vietnam outpaces our country's tax effort with only 22%. our high corporate tax rate of 30% hinders our competitive edge. A look at the trends in corporate income tax in the ASEAN shows the overall decrease in the rates over the last 15 years. Most ASEAN members impose general corporate tax rates that are within a few percentage points of 23% on the average. However, our 30% rate is nearly double the 17% rate of Singapore. ASEAN nations have and will continue to respond to prospective investors with the manipulation of tax rates to compete with their neighboring countries.
We would like to thank Pinoy Serve Manpower Incorporated and Star Express Incorporated, number 2270 Taft Avenue, Malate, Manila.
Stay tuned. We'll be right back.
Last week, Attorney Benedict Togonon discussed with us the position of the Tax Management Association of the Philippines on lowering personal or individual income tax. Today, we invited him again to share his insights on corporate income tax. Attorney, are you in favor of the projected corporate tax reform of the Duterte administration?
Okay, the reduction, the proposed to reduce the corporate income tax rate to 25%.
Currently, it is
30%.
30%.
There is the proposal to reduce it to 25% to make the Philippines competitive and attractive to foreign investors. The reason for this is because the Philippines, at 30%, we have the highest corporate income tax rate in
the region?
our region.
Wow.
So, reducing it to 25% will make the Philippines a competitive country. From the perspective of foreign investors who would want to come here to invest. But when I had a chance to attend the business leaders meeting in Davao, and if you listen to the
Discussions.
proposal,
Yeah.
the official proposal which the business leaders presented to
The President.
President Duterte at the time, the proposal is even to reduce it even below 25%.
Oh, wow.
If only to make the Philippines really more attractive to foreign investors.
Yeah, actually, here in the region, we are already left behind because most of the investors, especially the foreign direct investors, would like to choose. Of course, they are always after profit.
Yes.
And they would like to choose which is a lower rate of corporate income tax.
Exactly.
Yeah. Will there be more foreign direct investments if we will lower the corporate income tax?
I was able to listen to a presentation last week wherein there is really they said that when you lower the income tax rate, it has an effect on the increase in terms of the
Investors.
not only the investors but the economic activity.
The economic activity.
of a country. So that is what is really that is among the objectives of the reduction of the corporate income tax rate, to really attract foreign direct investment.
What do you think is the most realistic or practical rate of tax for the corporations to make it more competitive and attractive to foreign investors?
I think the 25% is a good rate. We will simply match it with the highest income tax rate in our ASEAN neighbors.
So right now, the highest rate in the ASEAN region is around how much?
25%.
25, that's already the highest
Yes.
compared to ours,
Yes.
which is one of the
Uh-huh.
highest. We have the
Yes.
highest.
Mhm. So if we only match it with the highest, although we have to restudy that again later, because the other countries or neighboring countries, they're also reducing
He's reducing it.
Yes, further. Reducing it further.
Okay? Since the tax reform is a priority of the President Duterte's administration, when do you think is the earliest time this policy can be implemented or realized?
Okay. I think as already
Announced.
stated
Yeah.
and announced by the Department of Finance, they will submit their proposal come September.
September,
So that's just a proposal to Congress. But this is the reality. When you talk about reducing the tax rate, the reality is in legislation, you cannot simply have a rate reduction
yeah.
that will cause all whatever negative effects.
Yeah.
So you have also to think about the revenue positive
Yeah.
measures. So the key here is to have a balance.
So you reduce the
proposal.
rates?
You reduce the rate, there will be corresponding revenue loss there.
Yeah.
And
Look for
you
other
also
sources.
look for other sources of revenue.
Yeah, to augment the loss.
Yes. So if you can strike a balance and this balance is acceptable to Congress, then with the overwhelming support of
President
the
Duterte.
President, I would say that it's really possible to have this, at least some of these changes coming even before the end of the year.
Wow.
Because if you simply want to adjust the tax bracket
Yeah, that's
for
easier.
income tax, that's
Yeah,
easy thing
yeah.
to do. But if you want to reduce the income tax rate
corporations.
for corporation, if they will simply agree that okay, maybe because another option is to reduce it gradually over a period of time. So which we saw in 1997.
yeah.
When we had the comprehensive tax reform program back in 97, the reduction was
Gradual.
over a period of 3 years.
Wow.
So it is also possible that that will also be adopted in this case. So if they have a consensus that, okay, we'll reduce it, but we'll reduce it gradually, they can already agree on it now, and it could they could start the ball rolling and come up with the law.
Yeah.
So the most optimistic estimate would be,
Yeah.
say, in a year's time.
In a year's time. So that would be by next year.
Yes. But our experience in terms of the past
Yeah.
legislation,
It takes
we
time.
have to consider also the reality that there would be a lot of discussions.
Yeah,
And
objections.
aside from discussions, we also have to see our legislators would like to see the figures.
Yeah, of
This is
course.
really very important. What would be the estimate if we say we will reduce the tax rate? What would be the actual impact? Then if we are going to revisit some of the items here, because they're looking at revisiting the tax incentives that government gave to our businesses.
Yeah.
And the plan, what I heard is the plan is to take away those incentives which are no longer necessary for these businesses. So you need to see that in terms of the peso sign.
Yeah.
How much is the impact for this? So it would also really facilitate or hasten the process of amending the tax
Yeah,
code
yeah, yeah.
if all this data would be available.
Yeah.
That is why we're happy that finally the implementing rules of the TIMTA, the Tax Investment Management
Yeah.
Law, is already available. And the data from all these tax incentives, the exemptions, the VAT exemptions given to
All those
the
corporations,
businesses
yeah.
enjoying exemption, it can already be processed. It would be already available, and it would now be easier
Yeah.
for the policymakers and Congress to see how much is the impact in this kind of
Business.
this industry. how much are they bringing, how much incentive are they enjoying.
Yeah.
Is the Philippines
At a loss.
at a loss,
Yeah.
or is the Philippines at a disadvantage?
Yeah.
Are we really subsidizing more than they need?
Yeah,
So
yeah,
these
yeah.
are the things that that will really hasten. That process will hasten
Yeah,
legislation.
especially the multinational corporation. There are
Yes.
so many incentives given to them
Yes.
just to put up a business here in the Philippines.
Yes.
So aside from amending the tax laws or corporate income tax brackets, do you have other plans or proposals to have the tax reforms which could be implemented to benefit the business sector?
Okay. Last month, we submitted to the Department of Finance a wish list.
A wish list.
A wish list of the administrative issuance, which we hope the BIR will and the Department of Finance will consider revising. Because even at the administrative level, without the need for intervention from Congress, there are already things that we can change. For example, simplification of the tax rules.
Yeah, that's easy.
All these rules. We can already have that even without a law
Yeah,
passed by Congress.
Yeah. Maybe the Secretary of Finance will just issue regulations on how to implement
Yes.
and fast track all of this paperwork so that it would be laced.
Yes. Implementing rules of the real estate investment law.
Yeah, yeah, yeah.
So the REITs law, a lot of our businesses especially the malls,
Yeah.
and the real estate companies, they're very much interested with our REITs law. And would you believe we even have inquiries about the REITs law from foreigners, from foreign companies as far as Singapore and Hong Kong? They're looking into how we will implement the REITs law, and they want to see how they can invest in our REITs in the Philippines.
Wow.
So this would only require the issuance of implementing rules and regulation
Yeah.
that is favorable to the business, and the law is already there.
Yeah.
So if this implementing rules and regulation would be something that the business society
yeah.
would find acceptable, then
That's
we
it.
would be seeing this happening.
Oh, wow.
The potential of the REITs law is very promising.
Yeah, yeah.
Number one, when you have this REIT structure in place, the potential for employment is there.
Yeah.
The expenses for development will translate to money for more people. There would be liquidity in the market because more buildings, more malls, more real estate developments would be coming in.
So, next question. Are you in favor of increasing the VAT from 12% to 15%?
Okay. At present, we are not in favor of increasing
So
the
the
value
association
added
is not
tax.
in favor.
We are not in favor of increasing the VAT from 12 to 15% at this point in time. But we know that this is a very easy
Yeah,
collection
yeah,
for
it
the
is.
government. You
Yeah.
just change the rate.
Okay,
then
that's it.
The same people who already paid VAT will just be paying higher. Then it's so easy to collect. But from our point of view, we think that even without increasing the rate, there are other things that can be done with our VAT system that would help the BIR collect more. Number one, you need to plug the loopholes. in
Yeah,
the
there are
VAT
so many
system.
loopholes in the VAT system.
Yes. We all know that there are businessmen, some unscrupulous businessmen, who would really purchase fake
Yeah.
receipts if only to claim
Yeah.
input VAT,
Yeah, input VAT
and
tax
lower
credits.
their VAT output due liability. And the BIR and the DOF, I think, will take a look at the VAT exemptions,
Yeah.
the VAT zero rated transactions that are there right now, and they will try to see which among these are really necessary, and maybe they can change those and subject them to VAT. So
Yeah.
even without increasing the VAT, there is a potential, increasing the VAT rate, there is a potential increase in VAT collection.
So since there would be a loss in the revenue side when we change this rate, the corporate rate, from 30 to 25%. Of course, there will be a big loss.
Yes.
So what are you proposing to enact a law that would supplement the losses in terms of income?
This is not really our own proposal,
Yeah.
but we, if last May,
Yeah.
before the election, our association, we came up with a tax
Proposals.
policy survey.
Oh, wow.
We sent this questionnaire to all the presidentiables and vice presidentiables.
Yeah.
And we gathered their answer. We were very happy to receive the answers of all the 5 presidentiables at
So
the
all
time.
of that is all positive.
All of them answered.
So more or less, this would be the one that would augment the losses in terms of corporate income tax.
In their answers, we placed questions like, would you be willing to increase the excise tax on
Yeah.
luxury products
Yeah, usually it's always
and petroleum
there. Yeah.
products? And President Duterte, who was a candidate at the time, he said yes. And now we heard the Department of Finance adding the possible imposition of excise tax on sugar products or junk food.
Because usually when there's a loss in one item, usually they always get it from the sin taxes.
Exactly.
So they increase the sin taxes that almost it's already too high that maybe because they want to really eliminate those let's say smoking or
Yes.
drinking, that's why they really have to increase those rates.
Yes. So luxury products and the excise increasing or subjecting luxury products, and we even suggested petroleum products because the price of petroleum is
Yeah, it's
very
really
low at
going
this
down
point in
right now,
time.
yeah.
So this might be an opportunity to increase the excise tax so that you can have
Additional income.
additional revenue. This is something that is a possible solution.
Yeah, I think that's one of the biggest that you could collect.
Yes.
Stay tuned. We'll be right back.
House of Representatives, Deputy Speaker Miro Kimbo, taking the cue from President Rodrigo Roa Duterte, has refiled a bill that seeks to cut corporate income tax to improve the Philippines' competitiveness. It would amend the National Internal Revenue Code of 1997, which aims to adjust the corporate rate from 30% to 25%. In our succeeding episodes, we will invite Deputy Speaker Kimbo to join us and discuss House Bill number 2379. Let us help build our nation. Give your share by paying your taxes correctly and promptly for a better tomorrow. Once again, I am Dr. Victor B. Endriga, and this is Tax TV, a taxpayer's guide to Philippine taxation. Thank you for watching.
For comments, questions, and suggestions on our topic today on corporate income tax, you may email us at taxtvph@gmail.com, and Dr. Victor Endriga will gladly answer your queries.